Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Elon Musk calls for investor patience after Tesla missed his profit estimates for a fourth straight quarter, while Alphabet's CEO also asks investors to wait longer for results from AI investments. We'll talk tech. Deutsche Bank suffers its first quarterly loss in 4 years as it books a charge related to Postbank. Meanwhile, Santander raises its revenue guidance. We'll hear from the CFOs of both lenders. And growth slows at LVMH. China's luxury slump hits sales of expensive fashion and drinks. We'll have all the details.
In the meantime, a quick check on these markets. It's a sea of red. You are seeing risk sentiment notably turn to the downside. When you look at futures all the way to the currency space, Eurostoxx 50 futures down 0.5%, FTSE 100 as well on the back foot. But euro, dollar, and cable also seeing some weakness. What's driving it? Is it China? Is it the earnings? We're going to dive into those dynamics. The countdown to the opening trade starts right now.
Good morning, Wednesday the 24th. Are you a patient person? Because apparently your Tesla RoboTaxi is running a little behind schedule, and maybe that large language model that you thought was going to transform your investment portfolio and your life, not quite ready to deliver the profits maybe Alphabet thought it would be. That's where we are this morning with big tech. That is what is setting the agenda ahead of the opening trade this morning. And it's big tech, not so magnificent this morning.
Absolutely, and you're absolutely right. Patience is a virtue, it seems, when it comes to the tech sector. And that's what is being required of us today, from Tesla to Alphabet. Patience is all the rage. So from Tesla, you've got patience around the US election. That'll help dictate what they do in Mexico. RoboTaxis, as you say, being pushed back a couple of months. We knew it would be October, but we've got dates there. Now, even the humanoid robot, that's not ready, Kriti. Sorry to disappoint. That was yesterday's conversation.
I was very disappointed by that.
But the focus for the future is the value of autonomy. That's what Elon Musk tells us. Over at Alphabet, investors waiting to see how AI pays off. But really, this is still a business that makes a lot of dollars, most of it dollars, from advertising and from search.
And 11% gains in the advertising business, which is not a shabby number at all. But this is the peril that comes with being an A-plus student, simply because the analyst community is saying it's great, but it's not as good.
It's boring, isn't it? We know about that. We know that that's something that this company can do.
Yeah.
But the share prices are built on the premise of AI, and AI was talked about a lot. They didn't talk about search. They didn't talk about advertising on the call. They talked about AI an awful lot, which tells you that that's where they think the story is ultimately going.
But this is important as well because AI is also in the context of cloud. And I think this gets really nerdy really fast because even though Alphabet is a big tech company, it is still not the dominant player in cloud services. Microsoft AWS has the big market share of it, and Alphabet has been trying to break into that market. Oracle has been trying to break into that market, and they haven't. So I think that's why they're trying to play into that idea. But to your point, it is still coming down to advertising, and YouTube taking a big hit out of that.
And it's patience around CapEx and when it starts to pay off. That's the question, isn't it? Because they are increasing. CapEx around AI was higher than it had been expected to be. Let's talk about luxury goods then, Kriti. That's another topic of conversation this morning.
From the heavyweights in the US to the heavyweights right here in Europe, which was really a China story for a large part of it. But it also, I mean, I just have to highlight these numbers. I think they say it best here. 1% rise in organic revenue. That is half of the expectation.
Yep.
Earlier this year, that was 21% of growth that you see. That is the kind of weakness you are seeing in LVMH. A lot of that coming out of China, but a lot of that coming out of the States as well.
I've read a lot of the notes this morning already on this, and it seems the concern is that this is a company that is going to struggle to defend margins. Yeah. And that is where the weakness is going forward from here. The call, apparently, the CFO comments on the call expressed doubt about whether or not this company can do that. There's also the mixed story in Japan as well. The currency story there has been a huge factor into this as well. But it looks like going forwards, the messaging, the sense coming out of the call was margins have been good in the rearview mirror. They're going to be a struggle going forward.
So that could be a challenge. The CEO talking about the climate of economic and geopolitical uncertainty. And you can understand how that weighs on perhaps the purchase of expensive items or trips to Japan to buy them slightly more cheaply, which is the trend we've seen from Chinese tourists of late. But Sephora was weak. The Sephora growth was half what it could have been. And this is not high-end luxury. This is more affordable luxury on the makeup side rather than expensive handbags and drinks.
That's because I haven't been spending at Sephora, obviously. So it really is my fault. I take full responsibility. But I think the context is important here. You brought it in the context of the geopolitics. Let's bring in the broader context of luxury here. We have Burberry taking the same message. Swatch, to your point, over with those Japanese sales as well. Cartier, Richemont. The one kind of exception here is Hermes, which has actually been doing better relative to his peers. And I think that's interesting.
Are they out tomorrow?
I believe they're out tomorrow.
Yes,
so we'll see if they fall into the trend or if they're the outperformer.
Yeah, they've got it's a bit like, I'll take you back to the aeroplanes, which I've spent the last couple of days talking about. You want to get on the list, it takes a long time to get on the list. You want to sit on the list, it takes a long time to sit on the list. If you want that Hermes handbag, you've got to wait for it. And that, I think, could provide some protection for Hermes.
Is your name on the list?
Fewer safety concerns with the handbag.
Yes.
Than with the jets.
Maybe, but I suspect you've got to look after both very carefully.
Let's talk banks.
Let's talk banks. So where do we want to start? So you've got Deutsche Bank, first loss in 4 years, but that's the Postbank story, as you were highlighting in the headlines this morning. UniCredit's beaten a raise. That looks pretty solid coming through. Santander, they've raised their growth guidance. This is a story around Brazil. It's a story around Spain. There's a currency factor out of Latin America, which I think needs to be borne in mind here as well. BNP, equities, really super strong equities.
Equities and prime services up by 58% year on year. That was certainly a number that stood out, wasn't it? And those numbers, revenue and net at BNP, beating estimates. Things looking a little more lackluster at Deutsche Bank then, by comparison.
It feels like a tale of two banks, or maybe three if we're throwing Santander in there when it comes to record profits. To me, it's the buyback story that's really interesting, because I think 2 quarters ago, every European bank was talking about their buyback. They're talking about how interest rates are helping that. All of those tailwinds seem to be subsiding. And the fact that even in those kind of poor earnings, Deutsche Bank is still talking about pledging some 8 billion euros to shareholders, I think that comes with a little bit of caution from a lot of investors.
Let's talk about the caution. James von Moltke has been talking to Olli Kruk in Frankfurt about the numbers delivered out of Deutsche Bank this morning. I have to say, the tone of the conversation quite cautious from James. Take a listen.
For this year, I think prudence would dictate that we step back from seeking a second repurchase authorization. We've already returned, 1.3 billion to 1.5, billion to investors so far this year, and so we think we're demonstrating an ability to stay on track.
CFO of Deutsche Bank talking to Bloomberg's Olli Kruk in Frankfurt, talking about the buybacks, the repurchasing, sounding a little bit more cautious. Let's bring it all together, get an understanding of what is happening here. Bloomberg's Tom Metcalf joins us around the table for the discussion. Let's talk about the investment banks. Let's talk about Deutsche and BNP and compare and contrast.
Yeah, and I think compare and contrast is the right way to go. As I look across the earnings today, there's no sort of one through line. If you look at, say, Deutsche Bank's investment bank, where the real sort of growth there was among the deal makers, revenue in that business stream of advising on M&A, advising on equity raises, etc., that's doubled or something like that. Whereas its fixed income arm, normally the sort of, the bulk of that bank, was in line with estimates, but didn't really blow anyone away. And then BNP Paribas, wow, the equities unit absolutely did extraordinarily. Now it made more revenue this quarter than its fixed income arm, which I don't think's ever happened before. And that really speaks to something we saw on Wall Street as well, right, where equities, it's just the big story among capital markets. But of course, when you compare that to Deutsche Bank, they've exited equities, so they don't have that story there at all.
Exit equities, and then the bond pain was, I think, a 3% decline relative to a 5% gain for some of its peers. That was a massive gap. I want to bring it back to the interest rate story, because over and over again we've heard that that's been a tailwind. But now that we're hearing that kind of macroeconomic slowdown, or the talk of more cuts getting priced into the market, Santander is still benefiting from that in the EM space, but the others aren't. What sets them apart? How do they get through that?
Yeah, Santander have sort of almost like a double, tailwind, because in Brazil, they're actually benefiting from interest rates falling there.
Yeah.
And then, in Spain, it's one of the southern economies of Europe, which is still doing pretty well. And obviously, ECB holding those rates has helped it kind of, I think, post record revenue this quarter.
Yeah.
And then, you go across to somewhere like UniCredit, and, the story this quarter is all about fee income for them. It's been a big push, and we heard the CEO saying, look, this is really starting to pay off. We're seeing that fee income rise, which will obviously insulate them from that sort of rate slowdown you mentioned.
Tom, away from the rate story, the ECB also involved in some parts of regulation, and it seems that officials at the ECB are talking about the dangers of leverage loans and what happens when they go bad, and how much they want banks to provide on their balance sheets for that eventuality, and actually considering bringing down the amount that they need banks to put on their balance sheet. What's our story here?
Yeah, so we've been following this whole probe very closely. It's been going on for several years, and actually I think the Deutsche Bank CFO today was talking about how for years they've been engaging with the ECB. So this goes across like 12 banks in the EU. And yeah, the story yesterday was interesting because there's been a lot of pushbacks from banks saying, hey, the EU is sort of misunderstanding the risks here. They're asking for too many provisions. So the story was saying that the demand the ECB is sort of discussing internally, is sort of putting towards the bank, has kind of fallen from 13 billion to 7 billion. So you can look at that two ways. One, oh, it's good news for the banks, almost a halving effectively. On the other hand, I see 7 billion and go, that is a big number to absorb. And so I think what's happening right now is continuing discussions, and obviously the banks want that number to fall quite significantly, and the ECB probably have a very different view.
Tom, very nice. Thank you very much indeed. You got a busy day.
Yeah, a lot of banks earnings today.
A lot of bank earnings. Thanks for kind of joining the dots and figuring out exactly what is happening here. I want to take you back to what is happening with the travel story. EasyJet numbers just dropping on the tape as we speak. The headline numbers certainly look like they have beaten estimates, but it's really kind of the looking forward story that I think we're really watching out for, given what we heard from Ryanair. Still sees fully a capacity at around 100 million seats. The estimate was 101.22, so pretty much in line with expectations. We're not seeing the downgrade in terms of expectations that we got maybe earlier on this week in this sector from EasyJet.
We're also getting some numbers and a strategic update from Reckitt Benckiser, this UK-listed homewares business. They operate in the hygiene, the health and the nutrition spaces. They're cutting their like-for-like outlook on revenue. That's coming down to 1 to 3%. That's the new range. It was 2 to 4. So they're bringing down their top-line expectations. They're also talking about exiting non-core home care and assessing options for nutrition. So this sounds like a business in flux, one where we might see some asset sales.
All stocks that we're going to be watching coming up at the open, just shy about 50 minutes to that moment. In the meantime, we do have some other things to put on your agenda as well. There's plenty going on in the macro space. At about 10:30 a.m. UK time, you do have a German 10-year auction to the tune of about 5 billion euros. U.S. new home sales as well, showing up at about 3 p.m. UK time. And then an auction over in the States in the 5-year space, $70 billion up for grabs there. More earnings. We've got Caring after the bell. We were talking about that luxury theme. Plus, of course, IBM in the tech space. Where do they really respond? Do they use that keyword of artificial intelligence as well? And how does that do to the stock? We're going to, of course, break it right here live on Bloomberg Television. I think this is the first day we haven't started the show with U.S. politics. I imagine that'll pick up in the later half of the week as well. But Benjamin Netanyahu is addressing Congress today, the Israeli prime minister as well. And we should also mention that Joe Biden is due to speak tonight at 8 p.m. Eastern, which is 1 a.m. UK time, in case you are awake after all of this.
Sleepless.
Yes,
missing US
just feeling the
flow.
need to check in. And then, of course, we got that ECB speak and Fed speak as well. So there's plenty on the docket. I'm just curious how much you trade off of it.
Yeah, I mean, as you say, feels like the first day in a lot of days, in almost weeks, where we haven't gone straight to the US latest in politics. There is news flow. We've had some excellent reporting from our colleagues stateside and here in Europe talking about NATO demands. If we do see another Trump presidency, will it be a 3% demand of allies? Will it be a 4% demand of allies? All of these numbers have been given in the past. Or is all of this a negotiating tactic? Will it be much more transactional? We still ask those same questions.
I think it will almost certainly be transactional were we to see a Trump second presidency, but that number is it's the capacity to spend the money, which I think is also interesting here as well. Spending the money is actually quite difficult.
Yeah.
The capacity doesn't exist in some ways to build the stuff, the kit that we need to be able to get to those kinds of levels. You look at the supply chain issues that we spent the last couple of days talking about with the civil side of the aviation business. It still exists in the defence side as well. And Europe certainly doesn't have the capacity to spend that kind of money.
Meanwhile, Harris gets more support, Kriti?
More support, more endorsements, this time officially from Chuck Schumer, from Hakeem Jeffries, the two most senior Democrats now in the Congress, House of Representatives, and in the Senate as well. Look, this is a make-or-break week for Kamala Harris. She's now officially getting the names for a potential vice president pick. Whether or not we hear what her pick is to be determined, but plenty of reports coming out on various states and various governors that she's thinking of. It feels like the headlines, I'm about 3 days late to this, I'm told, is all about Brat Summer, though. We talked about this yesterday, Anna.
Oh, yeah, Kriti had to explain this to me yesterday.
Well, I had to be explained.
I've had the explanation already this morning.
I had to
Still
be
not sure
explained
I
by my
understand
producers,
it.
but I was heavily encouraged to talk to Guy about it because I was curious on his take about the Brat Summer and whether or not he, what's your hot take?
Understood it.
Understood it? I'm still wrapping my head around it.
Well, you can explain to me again in a little bit more detail, but I'm still getting to terms with this. But it's interesting that if she can get the younger demo, and she can get the female demo, and she can start to make that work for her, then this could be transformative in terms of her ability to go up against Trump. It's the independents that you've got to think about. It's not the two sides of the political spectrum.
Well, the jokes aside on all of that, to your point on the demographics, already you're seeing some of the polling, which again is going to vary, but I believe there was a Reuters Ipsos poll coming out as well that actually put Kamala Harris odds above President Trump in the general election. That was the first poll that's actually suggested she would bypass President Trump. Of course, this is volatile. This is still early days, but I think it's an interesting indication.
A number of months to go, but it is important if we are starting to get that polling coming through since she was... She hasn't been officially nominated yet, but since she's looking like she's going to be at the top of the ticket rather than further down, that is important to know. Let us tell you some of the other stories we're tracking this morning. Former President Donald Trump says he will meet with the Israeli Prime Minister Benjamin Netanyahu on Friday in Florida, the latest effort by the Republican nominee to build ties with foreign leaders. Speaking in Washington on his first foreign trip since the conflict began, Israel's Prime Minister says conditions for a ceasefire and hostage deal with Hamas are, quote, becoming ripe. Ukraine's foreign minister has arrived in China to discuss Beijing's possible role in ending Russia's invasion. The first visit to China by a senior Ukrainian official in 8 years. Beijing has put forward proposals for a peace initiative that would include Russia at the table. Ukraine is attempting to improve ties with Beijing as Western support wanes. And French President Emmanuel Macron says he won't pick a new prime minister before the end of the Olympics and doubled down on his call for a political truce following weeks of turmoil. The left-wing alliance's preferred candidate for prime minister has been dismissed by President Macron. Meanwhile, Politico is reporting that France's far right has signalled it's ready to support the far left in its bid to repeal Macron's controversial pension reforms. Coming up on the programme, we'll be across all of the earnings stories then, Guy. We've got LVMH, of course, in focus.
Absolutely. Plus, do not miss our interview with the CFO of Santander. We'll be having that conversation a little bit later on. Plus, we're going to be speaking to the CEO of EFG International. Giorgio Pradelli is going to be joining us as the Swiss Private Bank reports first half results. You want to join the debate this morning? Tell us what you think. What's going on out there? IB Plus, BBTV Go is the function on your Bloomberg. This is Bloomberg.
Given the political, but not only the political elections in Europe and in several countries, that led to some uncertainty of what would happen. There was uncertainty about what the ECB and the Fed would do. So there was all that uncertainty that all of a sudden started to crystallize out. So you saw these evolutions. You saw that what we had in the UK, you saw it in France, you saw it in Belgium, you saw it in many of those countries. And yes, there was some overall European volatility related to the elections that were going on all over the place.
That was the BNP Paribas CFO speaking to us about the bank's results, but also about political volatility there. Let's stick with the banking sector. The Swiss private bank, EFG International, has posted record profits in the first half of the year, citing a, quote, complex yet currently supportive operating environment. Giorgio Pradelli joins us, CEO of EFG International. Giorgio, nice to speak to you. So talk to us about your expectations for growth then, your confidence, just briefly, in the story at EFG, given some of the political volatility we're hearing other bank CEOs talk about?
Yeah, first of all, thank you, and thank you for having me. So first of all, yes, we have delivered record profit this morning and also record growth. I think that the environment remains quite uncertain and volatile, but having said that, for our business is quite supportive. We are on a good track. We have been in the last few years in a good trajectory, and this is why we could win the trust of clients. So our growth is actually above our target range. We are at 7.3%. Now, looking ahead, we still expect choppy waters, but if the environment remains like this, we think we will continue to do well. And we see actually positive inflows across geographies from different institutions. And so we are quite pleased.
OK, positive inflows across geographies. Can I ask you about client flows and how normalised the market is post the collapse of Credit Suisse? Is that all very much in the rear-view mirror, Giorgio? Are we through all of that turmoil, and how much have you benefited versus others?
Well, I think that the environment in private banking, international private banking, has stabilized. So I think in 2024, the first 6 months is very stabilized. The sentiment is good. So I wouldn't make any reference to what has happened in March last year. Clearly, last year we made a lot of investments. We hired more than 140 bankers. That for us is very significant. And obviously, a lot of these bankers are now bringing their business in, and this is why we see positive inflows. But in general, I would say that the international private banking ecosystem is very healthy and very stable at the moment.
Giorgio, good morning. It's Guy. It's got a little cold, but the M&A story was hot a little while ago. There was talk of you guys merging with Julius Baer. That story seems to have faded a little bit. I'm curious as to why, what happened with those talks. You still got excess capital as well. Are you still looking to deploy that? Talk me through your M&A strategy and talk me through whether or not the regulator is going to be comfortable with that.
So thank you, Guy. I see that, these M&A stories are always more interesting than record profits. I get that. But as you know, in our business, we have had a lot of speculations about consolidation. I think the sector at some point will consolidate, has been consolidating over the last decade or so. Now, the last 5 years, with the exception of the forced merger of Credit Suisse and UBS, clearly has been quite quiet. For us, the focus is organic growth. So the focus is to grow and build scale, hiring teams. Now, we like M&A. We have excess capital, as you said. So we are always at the lookout, and we try to build scale through acquisitions. Now, the last one we have done was in 2019, so the last 5-6 years has been quiet. Now, regarding the speculations that we have seen in April, May, etc., there has been many speculations over the years. So I haven't commented in the past. I'm not going to comment now. Now, the regulators clearly are a key stakeholders in our business. We are a very regulated business. And I would say, in general, if, I think that the regulator want to have a very solid and strong financial center. So if consolidation goes in that direction, I think they will be in favor. Otherwise, they will be more critical. I think it's business as usual in this respect.
But Giorgio, that's the regulator's point of view. From international and European politicians' point of view, they're pushing for cross-border transactions. If you are leaning into this kind of M&A strategy that you laid out, where in Europe are you looking? Is there a particular part of Europe that you're looking to build your exposure?
Well, that's a very good question. We are a global, we call ourselves a global boutique. We are present from, Australia to Panama, Miami, going through Europe, etc. Our strategy in terms of M&A, we outlined that when we did the Investors Day at the end of 2022, is quite simple. We want to grow where we are already present. So in Europe, for example, we are present besides Switzerland, in Luxembourg, London, UK, and Monaco. If we have opportunities in these jurisdictions, we would like to obviously increase our scale. And our business, I think that the debate about cross-border is more for the universal banks and national champions. In international private banking, we are all somehow global or regional, so the debate is much simpler, I would say.
An interesting dynamic, Giorgio. We look forward to hearing how those conversations progress throughout the rest of the year and beyond. Giorgio Pradelli, we have to leave it there, CEO of EFG International, joining us this morning to break down some of his earnings and the M&A strategy, not to mention some of his takes on the regulators as well. Coming up, we continue the banking conversation. Santander posting a record profit in its second quarter, beating estimates. A lot of that thanks to Spain, thanks to Brazil, thanks to the interest rate dynamics, really setting itself apart from what you're seeing over at Deutsche Bank and even BNP, arguably. We'll throw UniCredit in there as well. Lots to discuss. We speak to the bank's CFO, Jose Garcia-Cantera, next up on the program. Plus, of course, we're 30 minutes away from the opening trades across Europe. So we'll see how some of the banking stocks trade when we get those numbers. All that coming up next. This is Bloomberg.
I am cautiously optimistic of what you see in the EuroZone. Yeah? You see the growth picking up, you see there is demand, there are evolutions. So what you clearly see is the ECB is shifting. actually the whole economy is shifting. Inflation is tapering off. Therefore, the ECB is also reducing the interest rate. So the economy is picking up. And that's basically fueling a positive spiral.
That Brussels in the second von der Leyen administration is looking at competitiveness, economic growth as core pillars of their program. To us, that's encouraging, and I think the economy, our clients are looking for that type of leadership. Also, a reduction of bureaucracy and regulation. Those are all things that I think would stimulate growth here in Europe.
So that was the CFO of BNP Paribas and the CFO of Deutsche Bank speaking to Bloomberg a little earlier on. James wrapping the conversation up there, talking about what he's seeing with Eurozone growth going forward from here. That is a conversation that I think is probably relevant to our next conversation. Joining us now is the CFO of Santander, Jose Garcia-Cantera. Record profits out this morning, beating quarterly estimates. I note as well that this is the best efficiency ratio that the bank has seen in 15 years. Good morning. Welcome to the program. These are great numbers. Are they sustainable numbers?
I think they are. I think we are building a very strong momentum at Santander through a combination of a very positive evolution of our 5 global businesses, our diversification geographically, which means that our earnings are very stable and predictable, and transformation. We are transforming the bank, simplifying the number of products. The number of products is down 20% year on year. We have more customers, 4.5 million customers more than a year ago. These customers are more loyal to Santander than before. The number of transactions per customer is up 9%. So this is what is fueling revenue, which is up double digits in the first half, with costs fairly flat. And like you said, efficiency levels that we haven't seen in 15 years at 41.6%. We see no signs of asset quality deterioration, and this means that our return on equity was above estimates at 16.3%, with a capital ratio at 12.5%. So we continue to strengthen the balance sheet. The combination of the business model, number of customers, and digitalization is structural. And this is independent of the level of interest rates. So we believe the positive momentum clearly will go into 2025. And that's why we have upgraded some of our targets, KPIs, and objectives for 2024. Some of them actually bringing forward 1 year the targets we set out during our Investor Day a couple of years ago for 2025.
So over the last few years, we've thought about your bank, and we've thought about the geographical breakdown. We've thought about what's been happening in Spain. We've thought about what's been happening in Brazil, 2 key markets for you. Can I take from what you've just said that actually the gains going forward are going to come from these ongoing efforts with efficiency? The ability to make the bank run more smoothly is where the profitability is going to come from, independent of geography, independent of interest rates?
That is correct. Obviously, structurally, we are positioned towards, positively to rates in Europe, but we have been decreasing that sensitivity in the last year and a half, and we have negative sensitivity in Latin America, which means that when rates go down, margins go up. So structurally, that is the way we are positioned. But what explains our strong momentum today, again, is the combination of more customers and simplification, digitalization, automation, keeping costs flat. And we believe that we should be able to keep costs flat in the next couple of years. So we expect to see increased operating leverage, so increased revenue with cost flattish in the next couple of years.
Jose, good morning. It's Anna in studio. Wanted to pick up, and Guy referenced some of the geographies where you are active, and of course, many parts of the world where you serve customers. And in some of those parts of the world, we've seen democratic elections taking place. I'm thinking of Mexico, I'm thinking of the UK, of course. How are you thinking about political stability? Clearly, we have big questions around what happens in the US election. But so far, through 2024, what are you taking away as a bank that perhaps looks for stability? What are you taking away from these political events?
We operate in many different geographies. So we basically see elections almost every year in some of the geographies where we work. So we are very used to work with all types of governments, and obviously in many cases, like in the UK or Mexico, the new governments have set out already their priorities. Now we need to see how they execute them. We have started conversations, engaging proactively with these new cabinets to work together going forward. So generally, we are, what we are seeing, it's positive. We see very high levels of employment, which for us is key to assess future asset quality, and we are seeing soft landing in all economies. Maybe inflation is stickier than we previously thought. Maybe rates need to go down a little bit more slowly, but generally the underlying trends are quite good and sustainable.
Okay, so good underlying trends. And you're engaging with politicians, Jose. No doubt you're also engaging with regulators in various parts of the world. We've got a story this morning that talks about the ECB and the provisions it's going to ask the sector to make around leveraged loans. I wonder how your conversations with the ECB on that front have been evolving. Our reporting suggests that there had been a decision to ask for a large provision, and now that expectation is halved, that the provision will be a lot less than expected. What are your conversations around provisions for leveraged loans with the ECB?
Well, to be honest, we are a commercial bank, basically retail and commercial. We have very small amounts of what is called leverage finance. And we've been working with the ECB. And indeed, we believe that the initial provisioning requirements were a little bit too high and might have affected future credit demand in Europe. This is a very important point. We need to make sure that Europe remains competitive, that productivity in Europe remains strong and increases in order to compete with other parts of the world. And for this, the banking system is critical. So we need to have a competitive banking system. Obviously, financial stability is a key principle that cannot be lost. But within that principle, we believe that the contribution of the banking system to future economic growth in Europe is fundamental.
Well, speaking of that competitiveness you highlight in the banking sector, Jose, you've led me perfectly to my next question. In your home country of Spain, we are already talking about consolidation on the potential docket with the takeover bid from BBVA on Sabadell. If it does go through, in terms of assets, it would be larger. The combined entity would be larger than that of Santander. How are you thinking about that? How are you competing with it? And what have you heard from the regulator there? The CNMC has been pushing back on this, but you're highlighting the need to be more competitive. How is Santander doing that within Spain and then abroad?
Well, we to be honest, don't look at, relative market positions. We want to be profitable. We want to be the most profitable banks in all the countries where we operate. In Spain, in particular, we already have the market share we need to be the most profitable bank in Spain. But that's what we are, working for in all countries where we operate, in Brazil and in Mexico and in the UK and in Portugal, et cetera, et cetera. So that's our key objective, is profitability, not necessarily size, once we are at the size that allow us to compete how we want to compete.
Well, Jose, as much as I respect that and I hear what you're saying, your outperformance and your record profits are driven by Spain, which in turn is outperforming all of Europe, arguably to a lot of people's surprise within and outside the country as well. But if you aren't the largest by assets within Spain, can you really count on that outperformance to be sustainable? Bringing it back to the conversation we started with, whether this profitability is sustainable if you lose that excess market share, that dominant market share in your home country?
We are not the largest bank in Spain. We are the largest bank overall if you look at all our balance sheets around the world. So when you consolidate that to Spain, we are the largest bank in Spain, and we will continue to be if this merger goes ahead. Today, we are not the largest. Depends on the type of business. We are the largest in private banking and SMEs, but we're not the largest in any other businesses. And still, we are able to compete, like you said, and being one of the most profitable bank in Spain. So again, size is not always directly related to profitability. And our focus is profitability, not size.
Oh, well, let's talk a little bit about a different kind of deal then outside of the M&A space and talk about Ebury. There are recent reports that your payments unit there has a plan for an IPO of £2 billion. What can you tell us about that?
Well, we are always looking at capital allocation and basically maximizing capital in the group. in the case of Everest, this is exactly the same thing. We are looking at different alternatives. This is one of them, not necessarily the one that we will pursue going forward, but clearly we are looking at alternatives to maximize capital, like we always do.
All right, Santander CFO Jose Garcia-Cantera, we will leave the conversation there. We thank you so much for taking the time to join us on a day where Santander is talking about record profits in their earnings numbers. Coming up, we'll talk about some of our other stocks to watch this morning, including LVMH, luxury group, reporting a slowdown in growth as China's economic slump weighs on the spending story. That conversation next. This is Bloomberg. Tesla shares slumping in the aftermarket session over in the States after the EV maker reported its fourth straight quarter of disappointing profits, pushing back on the release of its highly anticipated RoboTaxi. They didn't even talk about humanoids to the extent that I wanted. Chief Executive Officer Elon Musk spoke on the impact of a Trump presidency as well. Take a listen to what he had to say.
I guess that there would be like some impact, but I think it would be devastating for our competitors, but and it would hurt Tesla slightly. But long term probably actually helps Tesla. That would be my guess.
For more, we're joined now by Bloomberg's Cars Czar Craig Trudell, watching, of course, every single piece of this. What stood out to you here? I mean, more disappointment in the EV space. Elon Musk not happy. What's new?
Yeah, I mean, it is kind of incredible because he did try to, essentially rationalize his support for Trump, right? And there has been a lot of concern that the Inflation Reduction Act that the Biden administration it's really been a landmark law for the current president. It is very good for Tesla, and Tesla itself has said as much. Musk has, in the past, referred to this law as well written. It not only incentivizes people to buy electric cars, but incentivizes companies to make batteries, and Tesla benefits from that perspective as well. He kind of tried to, wave away any concern about this by saying, yeah, maybe this going away would hurt Tesla a little bit, but it would hurt everybody else a lot more. I think in his head, Tesla is the only one making money EVs. No one else is. And so, we are out front and we will stay out front. I think that ignores a real concern that EV momentum in the U.S. is slowing and that this would only add to that slowdown, taking away $7,500 for a lot of consumers.
Where's my RoboTaxi?
It's been late by a few years, and you're going to keep waiting. Yeah. The unveiling of prototypes that was scheduled for August is now pushed back to October. I would note that Bloomberg first reported that earlier this month. Musk confirmed that last night. He said not only did he want to make some changes to the design of these cars, but he wanted to do, have some other little things to show as well. My bet is that that may involve the Roadster, which is another vehicle that you've been waiting on for years, that was supposed to come out, something like 5 years ago, and is still nowhere to be found.
So Guy's still waiting for his RoboTaxi, and when it comes, it's only a prototype. This is not filling us with confidence, isn't it? On the other parts of the story, then, we talked a bit about how the IRA has been beneficial for this business and the sector. What about tariffs if we get a Trump 2.0? How detrimental will that be, or what's riding on the tariff conversation?
I think that was very interesting as well. The company made a splashy announcement in the last year plus that they were going to build a factory in Mexico, and there was a lot of optimism about that signaling just more expansion, more demand out there for Tesla to tap into. Once the company really had a slowdown in sales, I think Tesla itself kind of looked at the amount of capacity they had and whether or not they really needed another plant and sort of pressed pause on that project. And I think last night it was very interesting that Musk said, well, maybe it doesn't make sense for us to make a plant if Trump is just going to hit cars imported from Mexico with big tariffs, as he's threatened to do. So, not only is he having to sort of rationalize the IRA bit, but he's also pointing to some potential risk of a Trump presidency in the form of hey, this big potential growth opportunity that everybody was excited about in the past, maybe it's not going to happen now.
Even though he's a big Trump fan.
He's a Trump fan and has set up a PAC to demonstrate and reinforce that support.
With his money, yeah. OK, so that's interesting. Thank you very much to our Bloomberg Kazar, Craig Trudell, with all the latest on the wait and see when it comes to Tesla. Plenty of wait and see and some other tech stories as well this morning. Let's look at the broader markets. Rachel Evans joins us, Bloomberg's managing editor for FX and rates across the US and EMEA. Rachel, good morning. Let's talk about the markets in a few minutes and FX and rates in focus, but also the macro theme, I suppose, being set by some of these tech earnings. We've had a little on Tesla this morning. In terms of Alphabet, we're waiting and seeing there as well. Does this sound like something? I see NASDAQ futures are down. It sounds like something that's going to weigh on sentiment, the tech story so far.
Yeah, no, I mean, I think that's going to be the big question, right, is what actually drives the S&P 500 going forward. I mean, we saw tech stocks taking an absolute beating last week, and really people are looking to earnings to kind of sort of change that around, give tech stocks, but also the S&P 500 really something to drive it going forward. I was really struck by an MLive Pulse survey that we had on Sunday that basically said that people are expecting to see earnings driving the S&P 500. I think that there was a sort of two-thirds majority of respondents that expected earnings to provide a boost. But, when we do see results like Tesla's results, like Alphabet's results coming back, you've got to wonder exactly which results are going to be the ones that act as that kind of boost for the S&P 500. So I think it's going to be interesting to see whether we do get kind of broad-based earnings strength coming through from some of, not the smaller names per se, but the more diversified names. We do have Ford reporting today. We have Chipotle reporting today. So I think just kind of beyond these big tech names, do we start to see kind of a more positive earnings story growing? Because that would be something that could potentially help with this broadening of exactly what is driving stocks this year.
I can draw a line between the tech story and the risk-off kind of narrative into the dollar, but then I look at the yen, and the yen's stronger, and I'm kind of wondering why.
Yeah, the yen is my favourite story at the moment for obvious reasons. It's been very, very interesting this year just watching it weaken and seeing kind of officials jumping in to try and intervene and support. But as you point out, the last couple of weeks have really seen a turnaround. And there's a few kind of competing theories about what exactly is going on here. The one I would point to as most convincing is that we've seen short positions really build up in the yen over the past sort of few months. Everyone betting that weakness is only going to continue, that intervention is going to be fruitless. I think some of those are now starting to get unwound. And the reason I think that those are being unwound is not necessarily because everyone sees hugely great things for Japan's economy, but I think two things are influencing people's feelings about this. Number one, we have the Bank of Japan meeting next week. They might actually hike again. Hooray. We've all been waiting for it. We saw the first move in March. There's been a sense that they were going to move rates higher much more aggressively than they actually did this year. So if we do see that, that would be a reason for the yen to strengthen. More interestingly, though, I think, is that the intervention jawboning has kind of changed strategy in recent weeks. When we saw them intervene earlier this month, they did so actually when the yen was strengthening. It was kind of bouncing around US data, and they jumped in to drive it further. That was a really interesting change in tone, and it suggests, I think, to some traders that maybe they couldn't be complacent if they were seeing kind of yen strength, that they had to always be alert for intervention. That, plus the fact that they did a rate check on euro-yen, suggested again that maybe they were thinking about broader intervention, and I think that got people a little bit cautious, and maybe they're now thinking, we'll take a little bit of money out of this and see where we get to with the Bank of Japan meeting.
A fascinating one, a 154 handle on dollar yen as we speak. Rachel Evans, we have to leave it there. Bloomberg's managing editor for FX and rate across the U.S. and the EMEA region. We thank you so much. Let's go from the macro to a little bit more of the micro and get our stocks to watch with Lizzie Burden. Lizzie.
Well, Kriti, we've got to start with the banks this morning. The biggest European lenders reporting, and we kick off with Deutsche Bank. Disappointing news this morning. Its first quarterly loss in 4 years. Trading slowed, and it booked this charge on its retail unit, Postbank, which frankly is overshadowing the operational strength elsewhere. Interesting to have the CFO speaking to our very own Oliver Crook this morning. He says it's not going to impact the medium-term plans to return capital to shareholders. But the takeaway from a case KBW analyst is these results are okay, but not exciting. So let's see whether traders are excited at the open. If we flip the board, we can look over to BNP Paribas, also reporting results this morning. A prettier picture, it has to be said, out of Paris. Profit rising in the second quarter, this on surging equities trading revenue, which of course therefore boosts the CEO's plans to raise profitability. And it's despite that backdrop of political uncertainty around the French elections. But if we flip over, we can stay in France to LVMH. We mind the whole luxury sector actually, but it's been disappointment out of LVMH this morning. Fewer wealthy shoppers buying Louis Vuitton handbags and Dior couture. Unfortunately, do we start to see a bit of contagion actually to the likes of Kering and Richemont? Do we see cosmetic stocks like L'Oréal suffering this morning? We keep an eye on luxury as a whole. Back to you.
Thank you very much indeed. Lizzie, walking us through some of the stocks that we are watching. The CAC 40's going to be interesting this morning, isn't it?
It really is. Already you're seeing futures down over 1%, despite the fact that BNP actually came in hotter. So it's the LVMH, it's a weight story. It also means that the DAX is also taking a beating in terms of futures right now, down 0.7%. Is that a read-through from Deutsche?
Yeah, is there a Deutsche Bank weight on the DAX and LVMH luxury weight not looking quite so luxury over in Paris, especially as we're heading towards the Olympics. And this is the luxury Olympics. This is heavily contributed to by LVMH, isn't it? So that'll be an interesting one to watch. But it seems when you are selling expensive things to very wealthy people, those people can move and they can find them more cheaply if they want to, such as in Japan.
They can. We should take a field trip to test out the theory and see just how much we should do, charge it to the Bloomberg Amex. But I think what's interesting as well is that in the broader sphere of things, you just have weakness across the board. We talked about the weakness in the stock market as well. You're seeing weakness in currencies. You're seeing a bid into haven assets. This is risk off, classic risk off across the board.
The dollar benefits in these kinds of environments. Absolutely. Anyway, the market open is coming up next. We will walk you through all of the details. That is next. This is Bloomberg. Wednesday the 24th, couple of minutes to go until the start of equity trading, cash equity trading here in Europe. I'm not actually sure this chart is very useful this morning. Blue line is what Europe did, kind of a fade into the close, a little bit of a bounce just before it. US fading into the close as well. The sentiment, therefore, is reasonably negative already coming out of the United States. But then you fold in Tesla, then you fold in Alphabet into this story. You're looking at futures in the States that are significantly softer going into this morning's session. We'll learn in an hour how some of these stocks are trading pre-market. Then you've got the European story to fold in as well. LVMH hitting the CAC. You've got the DAX being affected by Deutsche. The bank story writ large across these markets this morning. Kriti, the futures don't look particularly pretty as a result of all of that.
They don't. And look, we knew they would have a read-through. We knew the earnings picture would have a read-through. I think what we didn't know is it would take such a hit right off the bat in futures trading. I think I really want to highlight the fact that you were seeing the French future story down over 1%. The DAX down 0.7%. Is that a banking read-through, or is that simply risk sentiment getting worse? Remember, this isn't just a stock story, Anna. This is, of course, an FX story as well. Eurostoxx 50 futures down 0.8%. But even right here in the UK, the FTSE futures are in the red.
Okay, those are the individuals. Those are the markets, the overall markets. Let's go to some individual names. We'll keep an eye on Deutsche Bank, as we were hearing from the management of that business a little bit earlier on. Could that be a weight on the Xetra DAX, as you've been mentioning? A bit of a miss on fixed sales, a loss around the Postbank provision as well. BNP Paribas in focus, better than estimated revenue and net profit, really exceeding expectations and jumping versus last year on equities and prime services. So that's a better story. LVMH, though, could be a weight on the CAC 40 regardless, Guy. We know the negativity around China and luxury.
There's a lot to digest this morning, so here we go. It is the opening trade. It is time to see how this all gets priced in, and we are anticipating a slow but potentially negative start to this morning. So the opening trade for the FTSE 100, negative. Not by much. We're expecting the FTSE down by around, let's call it circa 0.5%. The CAC 40, I think, could take a while to get open this morning, but we are anticipating that we are going to see a more significant move to the downside there, possibly circa 1% for the CAC 40. It could take a while to get things going. There's some big stocks out there this morning that we need to see details upon. So there you go. The IBEX is down by 0.4%. You've got to price in what we're seeing with Santander into those numbers. The CAC is down by 1%. 0.3% at the get-go this morning. We'll see how the DAX opens in just a moment. But before we get to that, let's dig into these numbers a little bit more deeply and figure out what is happening within this market, Kriti. What are we seeing?
Well, Guy, the earnings story certainly doesn't help, and then the heavyweights of the weighting that we don't see. Your sensational 6 not helping the picture at all. But your biggest index contributor to the downside on the Stock 600 right off the bat is going to be LVMH. You're already seeing a 4% drop there, and moving the index is your biggest weight, Anna, on the index as well. But it's not alone. You've got Novo Nordisk, you got ASML, you even have SAP as some of your biggest weights. So there is that European earnings read-through right off the bat, but there's also an American earnings read-through.
Yes, and in terms of luxury and LVMH, this is having a weight on the sector. So going into this, you might have asked, is the bad news in the price? Well, clearly not in the case of LVMH, but not for the sector as a whole then, it would seem, because LVMH is down by 4%, Christian Dior is down by more than 3%, Hermes down by a similar amount, 3%. We've yet to hear from Hermes. I think, as you said, we hear from them in the next 24 hours or so. Kering down by 2.9%, Burberry. So a lot of weakness coming through on this luxury space.
The breadth is horrible as well. So you've got 80 stocks up.
Yeah.
You've got 488 stocks down, 32 unchanged. The breadth is very negative this morning. We've been waiting for the German market. Let's see exactly what is going on there and whether or not we have a trade. Let me just get onto my DAX line. Yeah, it's still yet to open. I've still got a positive number for yesterday's session.
But you know where we have some positive numbers in active trading? It's in the IBEX. It's in Santander. It's one of your sole outperformers across Europe right now. Those shares higher by 0.7%. Not enough to lift the entire index, but definitely one of the only stocks green on screen, alongside Reckitt as well.
Yes, the household goods company operates in nutrition and similar spaces as well, and they are reviewing non-core homeware and their nutrition business and talking about strategic change. And that seems as if it's enough to send the stock substantially higher this morning, 4.5% higher, despite the fact that they've actually cut their revenue outlook in the more immediate future for full year 2024. They've cut that. But the market looking through that and talking about, committing excess cash to shareholders and what will the structure of the business look like after some asset sales, I suppose.
I think what's also important, and we should point this out as well, is there is a little bit, for some of the green on the screen, I'm just kind of trying to pick out some of these. There, you are actually seeing a rebound in Porsche numbers. That took a major hit in yesterday's trade. This morning, at least the early indications, we are still waiting for the DAX to properly open, but at least on the Stock 600, you're seeing a move about 1.3% for those shares. So a little bit of a rebound.
I'm just trying to see what it is that's stopping the DAX from opening in terms of its performance, because you do have, like, single stocks are trading. It was Deutsche Bank. It's down by 3%. There you go. Deutsche has just opened, down by over 3% and continuing to fall. That was what was holding up the Deutsche, the DAX this morning. I was just trying to work out where it was, and now we know. Down pretty hard. So the market does not like the loss that it has delivered this morning. It's the first one in 4 years.
The banking sector as a whole, though, a little bit of a dip. But there is a much more mixed story, isn't there? We talked to Santander. That stock is up by 1.2%, so really outperforming a falling market today on the back of their upgrade to guidance and some of the other strengths that we talked about. In fact, as you say, the IBEX is doing pretty well, and some of the Spanish banks are at the forefront of that.
Well, I think the way you just see it kind of net, and the range here I think is so staggering, is on the macro point of view. When you look at the CAC 40, down 1.5%, the IBEX is almost flat on the day. At least we're only 4 minutes into the trading session, but still pretty interesting that these are the earnings effect that you are going to see. And it's not just the European earnings effect as well. We still have to factor in the U.S. tech story as well. And I want to bring it back to that Tesla story, bring it back to the Alphabet story. We did hear from the CFO, Ruth Porat. I want to read a very important quote that she said. She said the most important element is search, as it continues to reflect broad-based growth across verticals that was led by retail. And the reason I highlight this is because this really showcases the fact that Alphabet is dependent, at the end of the day, on that advertising revenue. It is still very exposed to the cyclical movements that you were seeing in a lot of business investment, and that you were seeing, of course, globally, despite its massive investment in cloud. Remember, it is still not the dominant player in that, coming, I think, third or fourth to Microsoft's Azure and, of course, AWS as well. But I'm curious how much you can macro this out, the message you're getting out of Alphabet, and apply it broadly. We have the perfect guest for that. Sonia Lau joins us around the table this morning, CIO at Legal & General Investment Management, with the coolest blazer, I have to say. I think every time you come on, you wear that, and I love it every time. Sonia, talk to us about this. We're seeing red across the screen. Earnings on both sides of the Atlantic are not looking good. Is this a panic moment for equity investors?
I wouldn't call it a panic moment if you consider that the weakness today is against the backdrop of course, a very long period of incredible strength across equities, globally, actually. And you've picked it up, right? There's a number of global themes that are impacting earnings, and they shouldn't be surprising. If you start with what's weighing on the Kakaron today, it's the China story. Now, Chinese economic data is not bad since yesterday. There has been trouble for quite some time. So to assume that the Chinese consumer might not necessarily continue with their incredible support for luxury goods, I don't think is surprising. What you're seeing today is finally the evidence in numbers. So the market reaction is actually quite natural to what should have been anticipated in that context. Now, the mixed picture across the banks, again, we should be very careful to generalize because, of course, the business setup, the business mix of the companies that reported this morning is very different. So what is the strength potentially in Spain is very different to what drives Deutsche, because clearly the exceptional charge they had to take is not something we expect to be repeated next time. But again, you had the Deutsche Bank chart on earlier. You look at the one-year performance of the company, and it's a setback now. It might well be it's the lack of a further share buyback. You know, there might be immediate triggers on the day, but analysts and investors very clearly will look at the repeatable and sustainable earnings profile of most of these companies. But don't ignore the macro factors. And coming back to the MAX 7, I read a wonderful headline this morning, the magnificent correction, and we shouldn't dismiss it, right? Because we've been looking at these companies and they've been driving the vast majority of the index level. But the expectations were for roughly 38% of earnings growth.
Yeah.
And you wonder how sustainable is it? Are we ending up at 30? It's still a formidable number, but you need a readjustment process for what has been an exceptional journey for these companies.
So you said pay attention to the macro. There's layers to that. Is the monetary, is it the fiscal? And within fiscal, I'm putting in the geopolitics as well. What drives the next 6 months?
To start with, it's all of the above. But as investors...
You got to pick one, Sonia.
No. You need to break it down, because you shouldn't try and put them all into one big picture. You need to understand what drives fiscal, whether this has then implications on inflation, and then you have the monetary reaction function to it. Hence, it will be the US election. If you consider the data we have been seeing, and we, of course, now had a surprise turn, so it is probably far more open than what it was prior to the changes over the weekend. But what we do know is that both parties actually are supportive of further fiscal expansion. Now, a Republican clean sweep, we know, would be more inflationary than a Democrat clean sweep. And with Kamala Harris now in the picture, this might be less likely. This is important to understand because elections create a lot of noise. But only if we have an indication that it really changes growth and inflation, will the market react to it. The US election will be such a big driver of that understanding. And this is important for the yen you talked about this morning, EM currencies. Because if the Fed is allowed to cut, that eases up the path for all these countries to react to it. A weaker dollar always benefits EMD. But you need to understand the reaction function across these, and this is where the election is your starting point to understand the wiggle room for the Fed.
And how do you position then ahead of the election, Sonia, when the polls are uncertain, they're in flux because we have new people in the mix, or one new person at least in the mix, and yet you describe a situation where on the inflation and monetary side there are going to be big differences between these two candidates. So do you position for one outcome or the other, or is it much more nuanced than that?
There's a third factor that you have to put in its valuation levels, because the asymmetry potentially on the back of what we might see is not, of course, the same. So there's been a lot of talk, of course, on spreads being at nearly 20-year lows in terms of tights. You have equity valuation where would be very mindful, and it's interesting to see the rotation we've already seen towards domestic stocks. But of course, with the closer we get to it, and we have to wait for the Democratic Convention, you will get more clarity on the actual plans that both parties will put forward. If the soft landing, and we have to take a step back, if the soft landing continues to materialize as it currently is, you might well see spreads where they are. So you have very little upside, but of course, unless you see further weakness in growth, you probably have just a sideways and you clip the coupon. But that would be reasonably attractive for equities as well, if you consider the potential rotation. I wouldn't try to position too much, because it's never been a good strategy to try to front run your thoughts on polls and the potential outcome. There will be sufficient time to get closer, to get more clarity. And as it stands, we have seen the polls shift quite significantly already. You might well wait and see. And as we see it today, you might see far more focus on the immediate impact and the understanding of where earnings will end up to supersede this with politics.
And what do you position for in China? Because there's a lot at stake for European corporates in China, and we've seen quite a bit of disappointment expressed in stocks, but also in commodity prices around the most recent meetings in China and the policy changes that didn't come out of that. Are you positioning for just more of the same, this sort of slow grind on the China story?
We are more neutral for the very simple fact, yes, the data is all bad, and we had the latest round in terms of credit growth, GDP. We know the imbalance, that consumption still is not high enough to outpace or to overcompensate the decline in investment. But, of course, Chinese assets are cheap. So you have to beware of the potential stabilization and hence more nuanced measures from the Politburo in terms of stimulating the economy. And that, of course, would then have not only implications for Chinese assets, but, of course, would potentially have a positive read across for all those companies, predominantly in Europe, that have large businesses in China.
If tech sells off and the market broadens, does the index go up or down?
That is, I think, a mathematical equation, because it depends on both sides moving, right? The concentration risk as such, that it depends on the magnitude of the sell-off. And it depends even more so where earnings expectations settle. Because it's fascinating. Overall, for the S&P, you're currently sitting at 10-11%. Yeah. As I said, that was starting 38 for the Max 7. It was roughly 7.5 for the rest, and rather negative, slightly improving for oil and materials. Yep. It's a fascinating divergent picture, and depending on where it settles, you might see the outcome for the S&P.
I have not been paid to be in a diversified portfolio. I have underperformed in a diversified portfolio for quite some time now. Yes. Is that diversification about to pay off?
Yes, our assumption is it is, and not just from an equity standpoint, but in general. Yep. Because, of course, the diversification didn't pay off. Equities would have done the job, right? So there's the story within specific indices, but there's a broader picture as well in the context of all the influencing factors we've discussed this morning, and how you think you can construct an asset allocation that will shield you from the potential asymmetry of eventual shocks or the implication of surprises from elections.
OK. So just thinking about, therefore, what I do going forward, what does a diversified portfolio look like that's going to protect me from some of that uncertainty?
So, the good old, fixed income equity, private markets will increasingly play a role, because you will see a level of uncorrelated revenue streams that will help you a lot in that context. And if you look at duration, if you look at rates where they are, the diversification benefit potentially is far higher than what it used to be.
We're confident that equities and bonds are going to be antagonistic.
Yes, for the time being. Of course, we had 2022 as the major driver against this, but proving the opposite. But over the long term, and in the context of where we're currently operating, we still believe that there's benefit in diversifying that way. But, as I said, not fully. So it's not just a classic 60-40. This is where private markets will play such a big role. So you're diversifying across a broader range of asset classes and more nuanced in the context of the individual areas. Because if you look at the steepness of curves around the world, right? Yep. Big differences. So this is not one trade that you say, I'm buying the steepener, because that will not pay you any money. You have to be more nuanced where you see the opportunity set arising. And, in fact, we have been placing the steepener trade on and off, because there is momentum behind it, but you have to be very targeted in what you're looking for. Absolutely.
Sonia, great to see you. Thanks for stopping by to see us.
Thank you.
And fantastic jacket. Thank you very much indeed. Sonia Loud, CIO at Legal & General Investment Management. Thank you very much indeed. Quick look at the Call 6. We mentioned it a little bit earlier on. There's some tough stories within the 6 this morning. As you can see, it is red across the board, but certain names definitely stand out, don't they? Look at what is happening with LVMH this morning. It is down by 5.5%. Some real weight on the cat care as a result of that. But there's lots of stocks we need to focus on this morning. Lizzie Burden's been doing a great job bringing them all together. Lizzie, what are you watching?
Well, let me continue that story of LVMH, Guy, because it is bleeding into the rest of the European luxury sector this morning. Kering, Dior, Hugo Boss, all down this morning. It comes back to people not buying as many lovely jackets like Sonia's, less demand for those luxury Louis Vuitton handbags. So Louis Vuitton sales suffering. There we are. Let's flip over to the banks as well. We can start off with the obvious stories that we would have expected off the back of the earnings. Deutsche Bank down 6.6%. We had the CFO earlier speaking to Wally Crook, of course, and they reported their first quarterly loss in 4 years. So this is what you would expect. You would expect BNP Paribas to actually be perhaps up because we had their report of profit rising in the second quarter, but actually they're in the red, lower 0.7% this morning. Santander is up. It beat expectations. It posted a record profit in the second quarter, so perhaps, as you would expect, higher, nearly 1%. But another surprise is UniCredit. They reported that they had a higher full net revenue and capital goals than before, profit topping estimates. So perhaps for UniCredit and BNP Paribas, actually it's more in line with the broader market weakness. Let me take you through some of the other corporate earnings stories we have this morning. We can start with EasyJet. I know the airline's been on your mind this week, Guy, at Farnborough Air Show. But actually, it's been a better story for EasyJet than Ryanair. EasyJet saying that airline ticket prices are holding up during this crucial summer period, and that in contrast with Ryanair shares down 29% so far this year. For EasyJet, it's only about 16%, but up this morning 7.3%. Reckitt Benckiser also reporting they said it plans to sell off some of its home care brands, revive options for its infant formula business. Traders seeming to like that. Rémy Cointreau struggling this morning. They said that sales slumped in the first quarter. That demand for cognac in the US and Southeast Asia struggling. And Rémy Cointreau notably actually underperforming its rivals like Diageo and Pernod Ricard as well. So a difficult time for them. And just finally, a look at ASM International here, the Dutch chip equipment maker, of course. They've said the orders beat estimates on the AI boom, but unfortunately, their shares down this morning. Let me flip over finally to the car makers, because you have been talking about the Tesla earnings, and you've seen the underperformance there bleeding into the likes of VW, Renault and Stellantis. But actually, Aston Martin on the up this morning, higher 9.3%. Why? Well, they reported second quarter revenue beating estimates, and it's also been a positive story for Porsche. Of course, as you mentioned, Kriti, they've had bad news on top of bad news this week with its EV ambitions and the supply issues because of flooding at one of its suppliers. But if we flip over to Porsche, actually, they've got some positive news this morning, reporting operating return on sales for the first half that beat estimates. So Porsche, I do think, also in the green. Back to you.
Thank you very much, Lizzie Burden, with the movers. And there were plenty of them also on the move. Some of the data coming through on Europe. And we're going to get a picture this morning, aren't we, around manufacturing and services and composite PMI data for the month of July. And this is interesting on two fronts. One, on the services side, where we see some outperformance versus estimates, but on the manufacturing, where once again we slump. And there had been a sense at the turn of the year that, you know, maybe things were improving, and even if manufacturing is still in contraction territory, is it getting a little bit better at the margin? Maybe that was the story for China for the first quarter. And yeah, since March, it's really just been retreating once again. So again, bumping along the bottom when it comes to the manufacturing story.
It's interesting that the market reaction was fascinating. We just showed it there, but your dollar's still at 108. It kind of it's just unchanged now, and I'm curious how you even interpret something like that, especially when we're doing all this detective work of what's actually driving.
Waiting for the German numbers as well, I suppose.
It feels like it's a dollar story this morning.
Yeah.
The risk-off trade into the dollar, I think, is probably the driving narrative, certainly when it comes to the FX story. And I think this narrative changes very much as a result of these PMIs. I think the service number looks a little bit better. If you can't get a better services number going into the Olympics, I don't know when you can possibly get one. So maybe that's a factor in terms of what we're seeing here. It's also been a really strong summer for tourism, generally. we could take it back to what we're hearing from EasyJet. That has been certainly an area of strength, though Europe seems to be wanting to push away some of those tourists, which is an interesting strategy.
It's an interesting dynamic. And we heard from some hotel businesses, didn't we, that maybe the Paris Olympics, not quite the draw people thought it was. Here's the manufacturing story. That was the chart there showing France leading things lower. And that story of lower manufacturing over the last few months has been something that we've seen in other parts of Europe. So we will see whether we get that echoed in the German data when that comes through shortly. We're going to be building up to the Olympic Games, of course. The opening ceremony takes place on Friday. We have live shots coming to us, announcements expected during the second day of the IOC sessions. This is the International Olympic Committee is meeting in Paris. They're expecting to be giving out the verdict on where future ceremonies are going to be held. And so this is
the winter. I think it's Salt Lake City is expected to get the Winter Olympics again.
There we go. So for the winter. So that's what's happening in Paris right now as we wait for the Olympics proper. Coming up, we'll be sticking with France though. LVMH sales growth slowed last quarter as sales in the region that includes China slid by 14%. We'll have more on that next. This is Bloomberg. Welcome back to the opening trade. We're 23 minutes into a session that's being weighed down in Germany by underperformance in the banking sector from Deutsche Bank, weighed down in Paris by the luxury sector and LVMH. So let's go to Paris and think about what's happening there. LVMH shares are negative today after the French luxury powerhouse reported slow sales growth in the second quarter as wealthy shoppers in China reined in spending on pricey handbags and couture. Let's get to Bloomberg's Jennifer Creary, who has details of what's happening over at LVMH. So not an improving story then at LVMH. Jennifer, what stood out to you?
Yeah, so I mean, you can see the market reaction today. Pretty disappointing results. So LVMH, the key figure that we want to be looking at is organic revenue in its fashion and leather goods unit. So that's its biggest division. And that rose 1%. So it missed analyst estimates of a rise of just under 2%. So a disappointing result. But if you think about the broader environment, luxury has been struggling for some time. So the fact that LVMH has been able to grow is something. But still a lot of weakness, particularly in key areas like the all-critical Chinese market.
Well, tell us more about those Chinese markets. I mean, the numbers I thought were fascinating. We go from 1% organic revenue down from 21% a couple of months ago. So much of that is coming from China. How long does that last?
Well, I mean, that's the critical question, right? That's what all luxury brands are asking, because we're seeing this across the sector. We're seeing this in other brands like Richemont, for example, the parent company of Cartier also saw weak sales in China, and LVMH too. So it's not just, the Chinese market in mainland China. It's also the traveling Chinese community, whether or not they're spending outside of that market. And we're still seeing some of that weakness still bleed through.
So we are seeing an effect this morning into the rest of the sector, and given the fact that some of this has been fairly well flagged, you could argue that's a bit of a surprise. What is new in this that is kind of affecting the whole sector, that is bleeding across into names like Christian Dior? Why are we seeing that this morning?
Yeah, I mean, it's a good question, right? So we're seeing a lot of this weakness come from what we call aspirational shoppers. So there are these shoppers that maybe make luxury purchases once or twice a year. It's normally at entry-level prices. And they're particularly affected when we see some of those economic headwinds. So they're the first to kind of pull back. What was really interesting from the results yesterday is we saw that sales for LVMH in Japan actually went up more than 50%. And the CFO on the call yesterday said that was because travelers, particularly Chinese travelers, traveling to Japan and taking advantage of that weak yen. So you can see some of that savviness in those.
But that hits margins, presumably. That's a margin risk.
Exactly, and that's exactly what the CFO mentioned yesterday. So while they are happy with that result, it comes at the cost of profit and margin.
Okay. Jennifer, thank you very much indeed. Perfect. Jennifer Creary, walking us through what we're seeing in terms of the luxury stocks this morning. That's one area that we are seeing significant weakness in, and it is certainly weighing on the European story. The other area is banks. We need to spend a bit more time talking about the banks. We're going to do that in just a moment. Santander, Deutsche Bank, UniCredit, they're all out this morning. We'll talk about them next. This is Bloomberg. German PMIs are very similar to French PMIs in a way, in as much as manufacturing is unbelievably weak in Germany. 42.6 is a truly horrible number for the German manufacturing sector. It's down from an already truly horrible number of 43.5. The survey was expecting a pickup. That has not happened. But the services number is strong, 52.0. And this is interesting in as much as the ECB is clearly watching services inflation quite carefully at the moment. And it looks as if services remains... It's down, but it's still positive.
Yeah, and maybe this is the more information that the euro was waiting for then, Kriti, as we were looking at this earlier on the French disappointment and asking, you know, it's not really moving the dial. There's a lot of yen action. There's a lot of dollar action going on in FX markets today. But this is just adding to the story around EuroZone disappointment, I suppose. And the manufacturing story, yeah, as you say, Guy, really echoing the French narrative that we are best case bouncing along the bottom when it comes to manufacturing. We really haven't seen a reassuring uptick.
You mentioned the euro. I want to mention the bond market as well, because we are seeing a sell-off across European bonds, except for into the bond market, which is just coming off of this data as well. Only down by about 2 basis points for the German 10-year. But still interesting that's the market reaction that we're seeing. Why is Germany and France, why are the services numbers so
well, the German number is still relative. Like, it's 52.0.
Still growing.
It's still growing, is my point. I think I'm trying to make it. But the expectation was for 53.3, which actually is a pickup. So we haven't seen that, which I think is interesting in itself. I think the shock is in the manufacturing, and this is China. I'm assuming this is the kind of the eurozone picture as well. Not seeing the strength maybe that we're watching out for. It was interesting. Rheinmetall was out with numbers this morning, which are quite strong. So parts of the German manufacturing story are still strong, but maybe this is therefore even more reflective of what is happening with the German manufacturing sector out of China.
There's that manufacturing chart then showing France and Germany now in that downward direction once again, having expected at the beginning of this year that maybe we were turning a corner. It certainly doesn't look that way. And so now we're seeing this China theme for Europe play out in the macro data, if that's what we're seeing here. But we've got maybe this macro reference, and then we've got the micro.
And note on that chart, though, the notable outperformers, that orange line, which if you really squint hard, is the UK data, which I thought was interesting.
And we'll get an update on that a little while in
9:30.
Yes.
Is it 9:30?
An hour.
Yeah, in an hour. So we'll get that number a little bit later on. Let's talk about how that reflects into what we're seeing with the European banking story. So you've got Deutsche, BNP Paribas, Santander, UniCredit, all out with numbers this morning. Deutsche Bank suffering its first quarterly loss in 4 years, trading slowing. It's booking a charge tied to legacy issues at Postbank. That doesn't appear to be the story this morning, though, in terms of what is having an impact on the stock, which is getting crushed. So the bank's CFO, James von Moltke, spoke to Bloomberg's Oliver Crook. Take a listen to what he had to say.
Second quarter was absolutely a continuation of the first. So momentum in the businesses, on the revenue side, also just client engagement, market share growth. We're meeting our commitments to shareholders around expense management. So we've delivered the second quarter in a row at a $5 billion expense base. And we're managing the balance sheet and also capital ratios, essentially powering through the setback that we had, which was the Postbank litigation provision.
And that's looming very large over this quarter and potentially the next. So what can you give us in terms of an update, in terms of discussions, where that is right now?
Look, little to update. Basically, with the court has been going through the timeline that was laid out back in April. So we've provided a brief. We're waiting for the written conclusion, and then we'll react. I'm sure the claimants will react as well to that. It's very hard to assess really the direction of travel from here. We'll have to see what the judgment or the next statements from the court sort of tell us, and also what the posture of the claimants is going to be.
And is that 1.3 the sort of worst case scenario? Is that the sort of ceiling on? Yeah.
We've booked to the maximum claim. We have interest that accumulates over time, but we've essentially booked to the maximum claim.
And if this group of investors does win, does it open up a can of worms in terms of other litigation from Postbank?
Well, look, not on Postbank. I mean, there's one other sort of there's one other unaffected claim that we think is extremely remote. But no, what it does open up is some uncertainty in the German takeover code, which is one of the reasons that we've been fighting this case for 14 years. And so there's some interesting questions of law, because I think the interpretation being pursued here is very novel. And hence we're vigorously contesting the claim.
And so you have contested the claim, saying that Deutsche Bank has done nothing wrong. Do you think that indicates that the sort of regulatory system leaves room for investors to take advantage of this? And how does that bear on kind of your thoughts about taking over businesses in the future?
Well, it does introduce risk, and we think this transaction isn't necessarily alone in having the fact pattern that we went through, and hence I think getting certainty back into the German system about this type of takeover would be sensible. And for us, it's about contesting the claim, hopefully delivering some better news to shareholders around this. But managing it in the best interests of shareholders and also the legal matters at stake here.
And what shareholders are also going to be caring a lot about today is how it's going to bear on your sort of buyback plans. And there was sort of some ambition for the back half of the year. It seems more remote. How is this going to bear on your payouts?
Well, look, we're really happy with how we've been able to manage through it in the second quarter. So with a CET1 ratio of 13.5%, essentially we more than offset the impact of the litigation provision. That sets us up well, I think, going into next year to continue delivering on the commitments we made to shareholders around a capital distribution trajectory. As you say, for this year, I think prudence would dictate that we step back from seeking a second repurchase authorization. We've already returned, 1.3 billion to 1.5 billion to investors so far this year, and so we think we're demonstrating an ability to stay on track.
CFO of Deutsche Bank, speaking to Ollie Crook. Ollie Crook joins us now. Ollie, is it that last point that's driving the stock lower this morning, and it's down and down hard this morning? Is it the Postbank story? Just walk me through the connection you're seeing with the various moving parts that we've had announced this morning and this big reaction in the stock.
Yeah, Guy, it's hard to sort of disentangle all of these things, but let's deal first with the sort of thing that is eclipsing everything else, which is obviously that write-down or that provision that they've put aside for Postbank. This is dealing with litigation that's been ongoing for a very long time. This is their takeover of Postbank back in 2010, and basically there are investors and shareholders in Postbank that brought a claim saying that they basically underpaid, Deutsche Bank underpaid for Postbank. So now they said early in April or in late April that they were going to put down this 1.3 billion euro provision to just sort of cover themselves. And by the way, as you heard from the CFO there, that is the maximum they can pay. So this has been sort of priced in for a long time. It's interesting now to see the stock down so hard, 8%, biggest loser. It was halted at one point due to volatility. The thing that it bears on in terms of looking ahead is in terms of the buyback. And you heard it from James von Moltke there that basically because of this provision and the sort of uncertainty around the Postbank situation, that they're probably not going to have a second buyback this year. However, he also said that their sort of general buyback plans and their returning money to investors will be unchanged. And to remind people, that is 8 billion euros through 2025. So that net figure over that period of time does not change. However, you do see it obviously reflected in the stock this morning, down more than 7%, almost 8%.
So that's the Postbank story. That's the buyback story. You look at some of their other numbers, and they aren't also looking very rosy. Walk us through some of the other parts of their business.
Yeah, Kriti, they aren't looking that rosy, but they aren't looking that bad, honestly, when you look at sort of where you had expectations in terms of the market, whether it was their asset management union, that was close to in line, investment banking, private banking, corporate banking, all really kind of within expectations in terms of what had been priced in for investors. And in terms of the outlook, they didn't really change a whole lot. They had a little bit more on credit provisions. That obviously isn't positive, but it wasn't anything hugely material. The one thing that the market pays a lot of close attention to is FIC, is that trading over here at Deutsche Bank. It's a huge part of their business. And in the first quarter, they absolutely crushed the competition across the United States and Europe. This quarter, it was down 3%. So this is another sort of growth driver for Deutsche Bank, not doing so well. I mean, von Moltke was sort of comparing it to the year on year because they did very, very well last year. That was part of it. But that will be something that is not encouraging things generally. What I think was interesting is they were talking about how much slower this cycle has gone than anticipated, that actually net interest income, the tail on that is going to be longer, but sort of corporate loans and lending has actually gone a little bit slower. Here's what he had to say in terms of growth, generally speaking, in Germany and sort of for their clients.
Loan growth has been more sluggish than we would like to have seen. We'd been anticipating it a little earlier than now. And that's true also in Germany. We still have had a net decline in our mortgage book, for example, this quarter. Some of that's deliberate, some of that's sort of the market environment. Mm-hmm. I'd say the German economy has found its footing, and so we're seeing growth now. It's marginally positive, but we think accelerating now in the second half and into 25.
So the German economy finding its footing, I find interesting just from the PMI data that we got just a few minutes ago, manufacturing really not picking up the slack so far. Maybe that starts to turn.
Yeah, we certainly keeping a close eye on that. We're also watching US politics and how that develops then, Ollie, of course. What did the bank have to say about that for their business, but also what clients are talking about on that front?
Yeah, so clients are very focused on this, obviously, and what a Trump presidency could potentially mean for Europe. Obviously, there's the question of tariffs that would be inflationary, would certainly reduce growth. So that is something that is very front and center for clients. He's saying that they're really sort of beginning to position themselves in anticipation of that possibility. What I also found interesting was also the EU elections. This apparently is also featuring very large in the mind of many investors and clients here in Germany. You know, remember, Deutsche Bank is really the big lender to Germany, Inc. and industry in general. Here's what he had to say about the EU Commission and the new sort of von der Leyen Commission. Have a listen.
That Brussels in the second von der Leyen administration is looking at competitiveness, economic growth as core pillars of their program. To us, that's encouraging, and I think the economy, our clients are looking for that type of leadership. Also, a reduction of bureaucracy and regulation. Those are all things that I think would stimulate growth here in Europe.
So for clients, really focusing on the European Commission and that focus on competitiveness, on industry, on defense, really front and center. And I think very often what comes out of Brussels doesn't really move the dial that much for industry. So what we hear from Deutsche Bank this morning is that they're hitting the right notes. The question is, can the Commission and Brussels play those notes for industry?
OK, Oliver, thanks very much. Bloomberg's Oliver Crook with a full rundown of what we've heard from Deutsche Bank this morning. And it certainly has been a busy day watching the banking stocks, and that stock down by just over 7% this morning. Let's go over to the French banking sector. BNP Paribas in focus. The bank's equities traders made more money than their fixed income colleagues for the first time ever. CFO Lars Machenil spoke with Bloomberg's Caroline Conan in Paris.
I am cautiously optimistic of what you see in the Eurozone. Yeah? You see the growth picking up. You see there is demand. There are evolutions. So what you clearly see is the ECB is shifting. Actually, the whole economy is shifting. Inflation is tapering off. Therefore, the ECB is also reducing the interest rate. So the economy is picking up. And that's basically fueling a positive spiral.
We had a lot of volatility with this month of June until early July. Could you please tell us exactly what this volatility impact is on your business?
Yeah, no, if you look at, so there was, given the political, but not only the political elections in Europe and in several countries, that led to some uncertainty of what would happen. There was uncertainty about what the ECB and the Fed would do. So there was all that uncertainty that all of a sudden started to crystallize out. Yeah, you saw the ECB acting. You saw several indicators that were like the PMI and all the other ones that were evolving positive. And that's the whole evolution that you saw in all of the countries. So you saw these evolutions. You saw that what we had in the UK, you saw it in France, you saw it in Belgium, you saw it in many of those countries. And yes, there was some overall European volatility related to the elections that were going on all over the place. But that's just what it is.
Last week, the ECB kept rates on hold, and we had the president, Christine Lagarde, saying that the September meeting is wide open. What's your scenario? Do you still expect 2 rate cuts before the end of the year? And what impact could this have on your business?
Our stance is that there will still be 2 rate cuts this year. And so probably the rates will gravitate towards 3.25. So that's basically what we have in mind. I remind you that for BNP Paribas, the fact that the rates, if they are at 3, 2.5, 3.5, intrinsically, for us, that is fine.
That was the CFO of BNP Paribas speaking to Bloomberg's Caroline Conan in Paris. Let's get more on this bank then and the wider sector. Bloomberg's Jennifer Serrain joins us on set. Jenny, we had the details then of Deutsche Bank and how that's performing or underperforming, the stock down heavily in Frankfurt. We've talked to Ollie about that. We've got BNP now down by 1.6%. We just heard from the CFO. Better than expected on revenue and on net. And equity's doing really well. So is it again the FIC disappointment? What stood out to you at BNP?
I think, in general with trading, it's never viewed as, I guess, positively by investors. This is not a business that kind of, powers through quarter in, quarter out. It's very lumpy. And so that's why you often see investors really wanting banks to kind of have kind of both engines running at all times. And so when you see a big beat on the trading front, it's just not something that investors like as much as when you see it on the lending front or something that's kind of more based on the fundamentals of banking, if that makes sense.
It's a bit lumpy, hard to value.
Yes.
That's always been the problem with having a big investment bank.
Yes.
What do I take away from what we've got today in aggregate between the banks, and what does it tell me what's going to happen in the second half?
I think there's a lot of one-off scenarios here. So obviously you've got BNP really powering through on the trading front, and then you have Deutsche Bank kind of getting a little softer on that front. And so I think it's kind of a tale of two cities in that way. And I do think, on kind of across the board, we actually did see some pretty sizable increases in investment banking revenue. So capital markets seem to have come back. Advisory really looking good. We saw that actually at the U.S. banks a couple of weeks ago. I do think the question now is that sustainable? Have we really turned the corner? Is the deal-making slump over? I don't think we have the answer to that just yet. So I do think that's one thing that investors are kind of looking at, trying to figure out, because a lot of this could just be, folks nervous about the U.S. election, pulling forward whatever activity they were going to do in the back half, and that kind of leaves the second half looking a little bit weaker. And so I think that's the big question that investors are wrestling with this morning is how much of these results are really sustainable, good gains, and how much of it is just kind of the one-off activity of the second quarter.
So when we do bank earnings, we do the classics. We do FIC, we do buybacks, we do advisory. We also talk about loan loss provisions. And the ECB is talking here about having demand to about 7 billion euros. That's less than what we were expecting, but still a pretty sizable amount. What's the logic here? What's the thinking?
I think, you see it with the ECB. We've really heard it from the Bank of England, U.S. regulators. Everyone is getting concerned about the size of the leveraged finance market and just how risky these loans can end up being. And so in a time when you've still got interest rates that are really high, even if they, might come down a little bit at the back half of this year, I think you're just seeing them trying to prepare for more hurt and more pain on that side of the market. And they want to see these banks kind of preparing for that. And so you see them saying, we're wanting more capital. We want you guys to pull back. We want you to be paying closer attention to these clients. And so it'll be interesting to see, how much this really impacts how the banks go out and court these guys. So far, we haven't seen much of a change. You still see these banks pretty hard going after these sponsors and private equity clients. But it'll be interesting to see if this really pans out and ends up causing a bigger pullback from the leveraged finance market.
It's so interesting we talk about them being so risky because back in Super Return in Berlin, all the private equity folks were saying an encouraging sign in Europe is that the leveraged loan market is outperforming in a way that it isn't in any other part of the world. I think we have to leave it there. But Bloomberg's Serene joining us to break it all down. We thank you so much. Coming up on the program, the aerospace supply chain is recovering. At least that's the view of GE Chairman and CEO Larry Culp. Guy Johnson had the interview there. We're going to dive into that. This is Bloomberg.
If you look at our order book in the second quarter alone, nearly 40% year over year. We see our utilization of the fleets, both the mature fleet, which we power with the CFM56. That has been steady, an engine that folks thought might begin to fade. Our newer generation technology, the LEAP engine on both the 737 MAX and the Neo at Airbus, that's probably up 4 points in terms of share. So our utilization could not be higher. Even just looking at the third quarter here, we have probably 90% of our third quarter projection in backlog today with respect to parts. So in terms of the demand signals we're seeing from our customers, things are strong.
So the hours being flown are going to remain consistent, you think?
We believe so. Okay. And going forward, they're going to increase.
That's the kind of the older story. That's the existing fleet that's already out there. As you say, the maintenance story is very strong. The margin off that is very, very strong. The story certainly at the Farnborough Air Show and all the air shows recently and throughout this industry has been what has been happening with the supply chain. Airbus lowering its guidance for the year, talking about engines within that guidance. Is the supply chain story getting better or is it getting worse?
Guy, I'm strongly of the view it's getting better. It's really all about the rate of improvement.
Right.
And what we shared earlier today with investors is that we didn't have the output that we had anticipated in the second quarter with our newest generation engine, in particular with our LEAP engine. But we're going in using our flight deck, our lean operating model, to help our suppliers help us. Jointly problem solving, really understanding constraints at the point of impact. And we saw tremendous results from that in the second quarter. Didn't translate into as many deliveries, perhaps, as our airframer customers would have liked, but we saw 2/3 of the suppliers that we worked with improve their output to us by nearly twofold. So that's encouraging.
Just kind of talk me through what's happening. So originally the guidance was for a 25% improvement for that engine. Then you went, I think it was in April, you were kind of 10, 15. Now you're at kind of flat to 5.
Exactly.
That feels like it's not getting better. You're telling me that it is, though below the surface, getting better.
It's not getting better at the rate that we had anticipated. But it's getting better if you look at the sequential trends. And that, from an operating perspective, that's all that really matters.
The chair and CEO of GE Aerospace, Larry Culp, speaking to me yesterday. This is a business that has kind of spun off everything else. We're left with the jet engine business. And that jet engine business is good and bad in so many ways. You've got really strong demand right now, but the supply chain story continues to be a real issue. He's saying it's not getting better as quickly as we anticipated.
Is this a sector still impacted by post-COVID, by the sort of legacy of COVID, which in itself is phenomenal? We're 4 years on.
It's extraordinary. So a lot of people left the industry. They basically, remember, the aviation effectively shut down, and they have taken a long time to get it back up. They also lost a lot of people. But it's taking a long time. And it was interesting, I was talking to Guillaume Faury at Airbus yesterday, kind of about this moment yesterday. He was saying we've still got a couple more years, like 2 more years before this is sorted out. This is a time when you're seeing huge demand.
So where does that show up? Does that show up in the backlogs for the Airbuses, the Boeings? Does that show up in the capacity constraints? Like, where's the biggest...
It shows up in the fact that a lot of airlines are flying very old airplanes. And that is...
Safety concerns.
So, well, it's not that. It's just... If you look at GE's numbers yesterday, they were good. Why were they good? Because you make a greater margin off servicing an aeroplane, providing parts for an aeroplane, parts for an engine, than you do in building a jet engine. They effectively book them at a loss when they sell them. So if they're doing all kinds of things on maintenance, that's great right now. But ultimately, if we're going to see improvements in efficiency for this industry, you need these new engines.
Just like lots of sectors trying to tie customers into some sort of servicing contract rather than just the sales and then let it go. Kriti, should we check out what's going on in the luxury sector this morning?
It's an interesting point that you made on the airline space, that it's kind of a post-COVID story, because that's the same story I feel like is China. We're waiting for a recovery there, and I think it's the very story that's weighing on the luxury sector this morning. One of your biggest index weights is going to be LVMH, down about 5%. You're seeing it bleed into the others. Kering, for example, down about 4% as well. Even Hugo Boss down about 3.8%. You are seeing luxury take a hit and drag down not only the Stock 600, but drag down specifically the French index.
And we're seeing the German bank, Deutsche Bank, under pressure over in Frankfurt, down by 7.6%. It's not exclusively there, though. We are seeing others in the banking sector under pressure as well. So BNP down 1.9%, UniCredit down 2.3%. And they're very different stories. There does seem to be some disappointment on the timing of returning cash to shareholders around Deutsche Bank. So that's certainly something we will watch. I don't know about you guys, but I just had a look at what is coming up tomorrow on this programme, and I'm about to go for a lie down.
Yes, there is a lot going on.
In preparation.
Well, a lot going on, but some really great interviews. We're going to speak with the CEOs of Julius Baer, Anglo-American, and Lloyd's Banking. There's a lot of questions right now in M&A for all 3 of those companies. We talked a lot about it today as well. Beyond the banking sector as well, we've had conversations with the AstraZeneca CFO, the CEO of Roche, and the Unilever CEO as well. So after our lie down, we will have some really good conversations.
And we'll have 2 hours to fit all of that in.
Yes.
It's going to be a busy morning. The European earnings season is fascinating. Not everybody is down this morning. There are companies that are having a good day, but it's definitely a morning of tech weakness and luxury weakness. I'm going to pick it all up, continue the conversation. The Pulse is coming up next. We'll talk more about what is happening in the luxury space. Got lots to talk about this morning. Busy morning. This is Bloomberg.